What's up, guys? Mr. Fit to Flourish. I got to put on the glasses for this one. So this one is called the 15-minute opening range strategy. So I wanted to show this and share why this might be one of the most powerful tools when it comes to trading. All right, let's get right into it. So trading on the 5-minute time frame. Let's take a look at Spizzy SPY. All right, let's take a look at SPY here. We're gonna go boom and a boom and a kazoom. Right, and we're gonna go to today's date. So 15-minute opening range. What the heck is the 15-minute opening range strategy? All right, let's go to the 5-minute time frame. Sorry, boom, boom. So the 15-minute opening range pretty much captures the range of the opens and closes, so the highs and lows of the opens and closes of the bodies on the first 3 bars of the day. All right. So the market opens at 9:30 a.m. Eastern Standard Time, as you can see here. Let's make this a little bit bigger. But what we're concerned with is, okay, so what is our 15-minute range? It's the first 3 bars, so it's the bodies, which would be the opens and closes of the first 3 bars. Okay. Once we get a break below or above this range, with a nice trend bar, might I say, but basically a break above or below this range, then you know that you're going to get a pretty good continuation. Okay, really good continuation here. So how does it work? So basically, you just wait the first 15 minutes. So this 5-minute bar formed. I'm holding the open, then we get a nice bull bar, and then we get another bull bar, but it's just a non-trend bar, and we create this range, right? So then we get a micro double top right over here. What's a micro double top? It is when we have a close and an open right next to each other on adjacent bars. Okay, so we get a micro double top here, and then we have a range. So we stayed in this little range that we created from our first 3 bars, 1, 2, 3. All right, and then we get a really nice bull bar that was also a bullish engulfing bar, and it was a micro double bottom, which means we closed and then opened right at the same level. Okay, and then bullish engulfing bar is just a big bull bar eating up a little red bar. Okay, but we have a nice trend bar. Trend bars are big bars that contribute to the direction of a trend. So nice big trend bar, and it closed above the previous range. Okay, so notice how we closed right over here around 584.39, and we had this range that went all the way down to 583.41. So if we closed below this range, then you could take puts or you can go short. But if we close above this range after this 15-minute range, if we close above it, then you go long. And this strategy is absolutely A1. It literally works like freaking 90% of the time. It's insane. So we had a nice 15-minute range breakout, and the entry would be after this bar closes. You would enter on the open of the preceding bar or the next bar. Okay, so you would enter on the open there, and look what we did. We, of course, you're going to target key levels and ATRs, all that good stuff. But yeah, we ended up going all the way up to our key level here before making a move back to the downside a little bit. Retested our key level again, broke above just briefly, and then now we're kind of trying to hold to reclaim that key level 588.40 on SPY. We also have a pretty nice trend here. All right, but yeah, that's pretty much the 15-minute opening range. We can also take a look at some more examples. This example is not going to be the best here because it's overexhausted bar, but definitely if you look on a day-to-day basis, this is pretty much happening all the freaking time. So here in this example here, here's our first bar of the day. This was Friday, May 9th. So here's the high of the range. Here's our first 3 bars. So 1, 2, 3. Here's the high of the range and the low of the range. Okay, so 1, 2, 3. Here's the high, and then here is the low. So we stayed in this range. Notice how we stayed in this range for quite a bit. And then finally, we get a break below. And we also have other confirmation for this downside move to take place. But after we close below this range, you would then enter, again, you enter on the next bar on the open of the next bar, and then set your targets. Okay, and like I said, this pretty much works like clockwork. So this might be the strategy that you have always been looking for. Okay, that you've always been looking for. So that's that. Anyways, it's your boy, Mr. Fit to Flourish. That's the 15-minute opening range breakout strategy. A lot of people call it the 15-minute ORB. Some people use Wicks. I'm telling you right now, it's all about the closes, the bodies. Okay, so if you close above a predetermined price, then it's showing you that buyers and sellers are agreeing that, hey, we are agreeing now that the price is actually higher than this, or hey, the price should be lower than this. So it's about the closes. Not necessarily the wicks. Wicks can mean something sometimes if they're extremely, extremely large, but otherwise the wicks don't matter, right? It's your boy, Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance,